NASDAQ's also down here today by about 0.67. Honestly, would love to see this one pull back a little bit more. If I take my trend lines off and we just keep this really simple, right? We have pretty much broken back into positive territory, right? So momentum is now up. Bulls, I'd say the market is back on offense. And in my opinion, pullbacks on this one, for me personally, my trading style and my approach, my outlook, I think those are opportunities where I will look for some long opportunities to try and buy the dip on this. You've got a market that is excited now about trade deals. We went from being terrified about no trade deals to now excited for the next potential trade deals to pop out. So market went from super defense to now what it seems like more on the offense. And so to me, I like buying indices, especially when they're on offense, right? It's much harder to buy them when they're on defense, when they're moving lower and trending lower, right? So I bought a collection of stocks over the last few months, and those stock holdings are doing quite well, but I don't have any NAS like short-term trades with a stop loss on them, and I would like to be long. So here's the thing though, I've got to wait for this market to come to me. Let me give you an example really quick with gold. For so long, gold just looked like it was never going to give anybody a pullback. And now here's the pullback, and you can see how quickly when these things are ready, they do in fact pull back. Like gold, if you had tried to time the top, maybe someone out there got really good with the timing on this one, but most people really struggled to call a top on gold. Most people who tried to do that ended up probably losing money. Now you've got a scenario where you had that kind of flicker into the 3,500 range for gold, and then we failed out quickly, double topped at that close level, and now it does look like we've got what seems to be a solid downward move happening. And I put out on my Telegram post, like I said earlier, make sure if you have not already, join the Telegram channel. It's completely free. But I shared a technical breakdown, pretty technical focused post on gold yesterday, pointing out 3 major things that I found that I think we could just recap really quick together on the stream here. So we're going to have our gold chart here. There's going to be one piece of information. I need to have my moving averages here. So, okay, let's talk gold technicals for just a second. And I'm going to give you my bear case for gold. Now, again, you guys know I love gold long-term. Like I'm always longer term, I'm always bullish gold. I want to, buy it if it keeps going lower. If it hits that 200-day moving average, I will be loading up on some long-term holds on gold. But let's get into it. So step 1, technicals here. Here's the challenge for the bulls out there. Here's the problems. Okay. Technicals are fascinating. Let's go through them together. By the way, just before I get into this, we'll drop the link here to the Telegram channel to join completely for free. Take a second. If you're not in there, I'm posting these things. I'm putting a lot of work into each one each day. So make sure to come join us in there. So number 1, it appears we're going to close for the first time, and foreshadowing here, we did actually close for the first time under 3,200 an ounce. This suggests we may be trending down. Why? Well, if we look at structure, right, this was that 3,200 level. We closed underneath it for the first time in a while. The last couple times we've come to this level, we paused and then rallied. We paused and then rallied. We paused, tried to rally, and failed. So that suggests a character shift in the price of gold here, at least recently. So that's step 1. Step 2, right? Step 2, or part 2 to our analysis here, is a key trend line above the current price has been broken, right? That's this one here, right? This one right here has broken. And a longer term trend line on gold suggests that there still remains a good distance below current price. A retest could lead to further downside. This trend line right here, right? See this one? So when we look at the above trend line, we failed, and the below one still has room to come down to. So that's number 2 of why I think technicals lean bearish in the short run. And number 3 is that the 200-day moving average is still a long shot away. The 200-day moving average may be acting as a magnet and could suggest a larger decline on the daily chart. I highlighted that I think technicals for gold are bearish, fundamentals are mixed. So where does that leave us? Am I shorting gold? No, I'm not shorting gold. I don't have a trade on gold, and I'm not willing to short gold. I'm just telling you that the technicals here look seriously broken compared to what they were. Over here, it was like you could not mess up longs. Now you're getting to a point where that smooth sailing uptrend seems to be challenged.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
I'm curious what you guys' thoughts are on that as well, but let me just kind of highlight that again, the 200-day moving average is the yellow line, guys. So typically, when you have something in a monster uptrend, even in longer term uptrends like gold has been, it's very normal to get retests of the 200-day moving average, right? In strong upward trends. Here was a retest, here was a retest. You can kind of see that acts like a long-term magnet. And we have been on gold very stretched for a very long time. Take a look at what happened over in 2020 when we had that parabolic moonshot to gold. What happened next? Well, gold price came all the way back down, and it was a pretty good size decline. That is a move here of 13% down to get back just to the 200-day moving average, which is simply what many traders longer term would call kind of the fair value level. So if we're talking fair value on gold, it's a 20% decline from the highs. So this is where you can acknowledge, even if you're longer term bullish. Let me not miss the news. Sorry, guys. We got 15 seconds to go. I'll come back to this gold thought because it is, in my opinion, an interesting one. Breaking news. Thank you guys for the reminders. Producer price index numbers coming out here momentarily. Got an initial negative reaction here from the dollar. Stocks mixed. Gold higher. Bitcoin slightly higher. Let's take a look at the numbers. We got retail sales and producer price index. Okay, so core PPI came in soft, very soft actually. Let's take a look. Core retail sales also came in soft. So let's talk about dollar impact for a second. Negative, 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 positive. Unemployment claims also coming in. Man, I didn't realize we had so many things. I didn't piece this together. And then flat on claims. Okay, so overall here, we've got on the inflation front, we have got more softness. So that's good. Inflation coming down. That's great. Core retail sales a little bit soft. Retail sales better than expected slightly. So we take that, we say, okay, that is a net overall softness for the dollar, which makes sense. And stocks pretty much unchanged. Okay. So yes, we had a soft inflation report both on the CPI and confirmed it in the producer price index or the PPI. So this was a soft round of inflation. Definitely a welcomed thing by the stock market. Definitely a welcomed thing by gold because gold, we could see some softness in the US dollar off of this. The basic idea being that rate cuts might be more likely. That could be bullish for gold. But let's go back to our bigger picture discussion we were having about gold here. I discussed that I think we may be in the midst of seeing a larger correction. And here's what I'm saying is I am not saying like, I think gold is going back down to 2,500 or I think gold is going to 2,000. I'm not, saying this is the end of times for gold and that it should, everything is rainbows out there. So sell gold and buy NAS. That's not what I'm saying either. I'm just saying that, okay, we have been very stretched from this 200-day moving average or quote unquote our fair value, right, which we're using as a moving average, we're very, very stretched. In fact, the last time we were even testing the 200-day moving average was November of 2023. We have not been back to the 200-day moving average in 549 days. It's been a very, very good stretch for gold. Anybody who has been bearish on gold in the last period has really struggled. So do I want to step up and try and call the top on gold? Absolutely not. I'm not shorting gold as long as this thing, it's very rare that I'll ever short gold.
Yeah, I've been watching a few of them. I was looking for some shorts on pound yen coming into the week, but we had a really bullish start to the week and price managed to close above some resistance here, which completely invalidates that bias for me. So I'm actually in the process of shifting my bias on the higher time frame, primarily the daily chart, from bearish to actually bullish now. So pairs like pound yen, I feel like there's more upside. I'm not overly excited about where we're trading, so I'm not necessarily looking to buy it, but I'm no longer looking to sell it. I like New Zealand yen. We've created new highs with that one. If that one can potentially come a little bit further down, I would be interested in potentially picking this one long as well. Kind of like a inverse head and shoulder pattern, left head, and then kind of looking for that right shoulder for the continuation. Aussie yen, I feel like, is in a similar boat to this one as well. Also come back into some nice resistance. I don't really want to be buying it now, but let's say if we can come a little bit further to the downside into a level like this, 92, that does interest me for some upside as well. Again, similar to that inverse head and shoulder pattern. So yeah, I've been pretty bearish with the yen, but it looks like things have shifted. So I'm kind of no longer looking to short right now. And if I can see some low prices, that will definitely invite me to some longs.
Yeah, and just to follow up on the yen pairs myself, I liked, actually, you spotted NZD-JPY. That's another one I'm watching too. I know Marco's looking at some short-term bearishness on that one, and clearly chart has had some solid moves lower here. I picked up way too early a long position yesterday on the Kiwi yen. Very small position, but I'm using a bit more of a dollar cost averaging approach and may actually look to scale into this trade at some of those levels you actually marked out, Miko. So I'm looking at this 85.8 region. It's a possible area to add slightly to my trade, and then 84.5 as well. I use a slightly different approach to trading currencies than I do trading indices and commodities. When I'm trading indices and commodities, I'm more looking to tight stop and trail it. And then with currencies, I'm a little bit more longer term in nature, big picture macro, and kind of scaling in, scaling out to trade. So I'm watching Kiwi yen. I do think that longer term, we may still be in the process of doing that inverted head and shoulders as you just discussed. But to Marco's point, I thought we would have held this support level. Once we broke that, we may be seeing a retest down to this 84 level. This is a good example also, just real quick, of how people who have, let's say some of us are bullish and some of us are bearish on the same chart. It is possible that both the bull and the bear make money in the end. Like with my approach, like if I buy here and then I buy here and then I buy here, each one is a small position. That leaves downside in the short run to capitalize on. And then maybe long term we rebound. We could theoretically both make money. So just something to think about is like different styles, different time frames all play into a role. The only people who, the old expression is bulls make money, bears make money, pigs get slaughtered. So, and pigs typically, I find that to be a good nickname for people who are basically like gambling their account, like super high risk, trying to go all in on this move. It's got to be down by the end of the day or my account's blown up. So none of that here. But anyways, Marco, what else are you watching? We've talked a little bit of yen crosses. We've talked gold. What do you think about the dollar right now? This is an interesting development recently.
But before that, I wanted to touch on swaps. So what do you guys think of swaps, and does it play a part in your trading? Because I know USD JPY longs are now swap city. So if you can go long on that currency pair for, let's say, a month and have it just go up a little bit, you can collect some nice swaps. Do you guys take that into account?
I definitely do. Miko, what about you?
No, not really, to be honest. Swaps they do add up in the long run. But again, I'm primarily looking for bigger moves in the market, higher risk reward opportunities. So Swaps, although they can eat against some of my profits, I just charge it to the game really. So if there's a good opportunity, if I'm paying negative swaps, I'll still go for it. Maybe if the market's very choppy, maybe I wouldn't, because I understand that I might be potentially in the trade longer than I want to be. But my focus is always the setup.
Yeah, and Marco, just to follow up on that, I had to actually correct something that I had wrong too about yen trading in general. So I've discussed in the past that I do like the opportunity with something like FXY because this is an ETF, right, that I can trade Japanese yen on. And after doing some research together on stream, we actually found out that basically the carry trade is kind of considered in the pricing of this instrument. So even if you don't get charged a daily swap by holding this ETF long, which is a yen long position, it still counts against you. So that carry does not go away, even if you try and escape it through options or ETFs or futures contracts. It is still present in the valuation of the yen. So just something to add some context. It is part of the interest rate differential is the fact that you can't escape it, right? So with Miko's response, I think that's totally valid. It also depends on who you're asking, because if you're like talking about me, if I'm talking about holding a position for 3 months, that swap could be very, very expensive. So it depends what your hold time is. With currencies, I am typically a little bit more longer term in nature. So with Kiwi yen, the swaps are very positive, but to Miko's point, if you're trading for the swaps, that's a dangerous approach too, because swaps, like if you're trying to capture the positive swaps, that can turn really sour, because who cares if you collect positive swaps if you're on the wrong side of this move, right? You could collect positive swaps and it's barely putting a dent into this damage, and vice versa. If you're right, sure, you have to pay swaps, but if you're right, you made way more than the swaps cost you. So, give and take, and each trader, if you trade FX, should consider these things based on their own kind of strategies and approaches.
Yeah, I found I do have a bit of a bias for going long on, let's say, NZD-JPY or USD-JPY for a longer term trade, because the interest rate difference is quite big. So you do get paid a little bit of swaps, but when you put it down on a piece of paper, it's not that much as people think. It's actually quite little. So yeah.
Yeah, no, and there are some swap capturing opportunities out there for sure. The issue is that if you're holding anything in FX land for too long on leverage, you just have to be careful, because you might be collecting a swap, but if the chart is moving against you, the carry trade is really only an extra perk if you're on the right side of it and the chart is actually moving in your favor or sideways. But if it's moving against you, it is pretty much a waste of time to try and capture the carry trade in a risk-off environment. Typically, risk-on environments are going to favor the carry trade. Risk-off environments are going to hurt because you're on the wrong side most of the time. Because if you're long, if you're short Swiss franc, short yen, anything that offers that positive carry, usually it hurts. People are unwinding that trade, and you're on the long side of it. So, but yeah. Anyways, back to the U.S. dollar for a second. Marco, what do you think about it? Dollar index bottoming or pausing?
So for the DXY, I would say that the buyers are taking a little bit of control right here, but the selling pressure is still very prominent. So what is helping the US dollar is all of these trade deals that are being done, possibly some future trade deals. We still have a lot of countries that haven't had a deal with the US yet. So if the deals start coming through, I do think we're gonna see more upside for the dollar. For now, I'm not sure. I couldn't really give you a bias, to be honest, because the sellers were in major control right here. Now the buyers stepped in a little bit, but there still hasn't been that decisive move to the upside. There still hasn't been that massive bullish pressure. You could possibly try to draw a trend line like this. But for me, this is kind of in no man's land, in my opinion. So I think the JPY pairs actually look more exciting than the dollar pairs right now. And also the indices and crypto looks more exciting as well.
Yeah, fair enough. I'm also a bit neutral on dollar index, but I'm curious, Miko, you were bearish for some time. Are you still feeling bearish on the dollar? Is this an opportunity that you're watching? What do you think on it?
Yeah, so with the dollar, I'm still long term looking for a lot more downside, but I do think over the short term, maybe next few days or a week or two maybe, I do feel like we can see some upside. It looks like things are shifting a little bit. Like Marco said, we saw a lot of selling pressure, but that looks to be not as present anymore, and potentially we're seeing some bullish momentum now. But on the higher time frames, I do think this bearish leg still has a bit more meat to it. But I do want to see us kind of come back to some higher prices so I can sell it again. Because looking to the left, primarily this is kind of strong levels of support. So even if I do expect the market to fall from now, it's just not a very inviting place for me to position myself short for it. So I kind of want to see price push up. In fairness, we have seen some higher highs and high lows here on the 4-hour chart. So if that can continue, perhaps we do see a bit more upside. And then I can start to potentially look to short again. I'm looking around this kind of area, 103.5, 104, to potentially look for some longs on like euro or pound or something, whichever looks good at the time. But yeah, I'm still long-term bearish on the dollar, but I think we can still see a bit more upside.
Not really anything interesting from the news. We had a slight downturn in PPI. Retail sales, actually, let me just pull it on here. Retail sales month on month, also a slight downturn to 0.1. When I say slight, I'm obviously comparing it to forecast and not from previous. If we compare from previous, yeah, definitely not great. PPI month on month also coming down to negative 0.5. Retail sales month on month, 0.1, slight increase there. Unemployment stayed the same. So yeah, not great for the dollar. If we also account for the previous was the CPI we had. So yeah, not great for my dollar long idea, but I'm not really in any position, so I'll be honest, I don't really care too much. I'm quite happy to just sit here and have a chat, and I'll recalibrate next week. Royal, hello. Ball out. Yeah, I wasn't paying attention to your messages earlier, to be quite honest. I'm halfway through watching the Rogue Trader film, and then I realized I've got to be on stream, so I paused it and came over here. So Ball out, if you want to give me some signals, let me know. I'll have a look. Save all animals, go vegan. I did try to be vegan, but I'll be honest, couldn't vibe with it. Trade with Dr. PFX. Hello, how you doing? Gold on the move. Is gold on the move? Yeah, gold is having a bit of a recovery. To me, I can't say that gold's bullish short term until we've broken back above here. And even at that point, as I've been saying all week, I need to wait and see how the market reacts at this gap. Because we saw pretty much all the FX pairs fill the gaps and then immediately have a rebound. I mean, it's not really led into anything sustainable or anything sustained, but yeah, it'll be interesting to see how gold reacts once we get there. If everyone sees the economy doing fine, then everyone will be rich. Suppose so. I actually just cashed out my S&P investment this morning, so that should be hitting the bank account quite soon. So I'm excited about that. I'm looking forward to all the bottles of champagne and the first class flight I can purchase with that. EU to 1.19. I'm not in this position for clarity. It was one I was looking at on Sunday. It was on the watch list, but I didn't take it. I don't know. I still am bullish on the dollar. It would take a lot for me to really be bearish. Let me put this on the monthly here. So this level remains intact, really. We're still not seeing any follow through to the downside, which, yet again, it's a monthly level. I'm not going to try and argue that. Even if there is some turnaround, I'm not really going to position bearish on the dollar until we start breaking structure. So I'm kind of flat, to be honest with you. I'm still in a couple of short positions on euro dollar, DCA positions, but they're very, very small, so I'm not really that bothered about it. It's a good film. So far, it's really good. I've never heard of it, never heard of the Rogue Trader film until I watched, what's his name? Words of Wisdom. I saw the round table he had with him on. with, I can't remember his name, the trader that lost all the money, and he was saying, "Oh, yeah, I was in jail." I was like, "What the hell? Why was he in jail?" So I went and had to do a bit of research. I've got to say, actually, when you sat in a bit of drawdown, or you've just had a bad trade or whatever, and you're feeling down, you just thinking about the situation some of these people put themselves in, and the amount of money that people lose. It's like, wow, you know what? It's fine. It's really no big deal. Vegan, my food is vegan. Cows eat grass. I don't know. To be honest with you, I completely agree with the vegan movement. I have absolutely no issue with it. I would not sit here and clown on the ideology behind it. I think some of the things the activists do is obviously a bit extreme. Just like the stop oil people, I think that's a bit crazy, but each to their own. I'm more in the camp of, I'm not bothered if someone eats meat or is vegan or whatever, but I think I will always try to get high quality food from, like, not like battery farm chickens and stuff. I don't agree with that sort of thing. I think that's a bit, Anyway, I'm not going to go into all that. We could have I could sit here for the next hour and talk about all that stuff. Hey James, I'm guessing live's a part of your paid membership. Yes and no. I do. I'm live 2, 3, 4 times a week on my own channel on YouTube for free. But then on Sundays I'm live, yes, for members, and we also do webinars with my finance and economics expert on Wednesdays. For exchange, do not cash out the S&P. Nah, I'm going to be honest, Rogi. I think that's the S&P is great. I don't have to do anything, and it can just grow. You are right. But why would I have money in the S&P? I bought the dip, and I have been investing a little bit here and there. I've got a video on that on YouTube actually about how I was doing that. But recently, I've decided, you know what? Why would I have it in the S&P? It's slow. It's boring. And it limits what I can do. I've got other things I want to put money into. I like being hands-on with investments. I like to be involved, not just sit, do nothing. GJ seems to miss entry. Let's have a look. You know what? GJ longs actually look quite good here. So we filled the gap, respecting previous structure. Let's just see the yen index. Let's see what's going on there. It is bullish, which I don't really like. I don't know. I'm not sure about the current entry idea, but with dovish Bank of Japan and sort of neutral Bank of England, you might be able to get something here, just some sort of technical reaction, but I wouldn't look to hold this for too long. No James shirt EU. I'm sorry, Ball, that's just the way I operate. I don't buy euro, even if Eurodollar is long, unless I'm swing trading, I'm not going to buy it. My DCA approach is basically short only portfolio. So I would agree. He does sound a little bit sketchy. Although, actually, I was watching, I think he did a podcast on Bloomberg. I listened to that as well. And he sounded really down about it. And I feel quite bad for him, to be honest. Billions was an amazing show. Yeah, I did like. The problem is with Billions, it got a bit out of hand. I really liked the first season, 2, 3 seasons, but it got a little bit too far. Vegan movements useless as its woke culture, lazy, not creative, have no purpose. I don't think I agree with any of that. I think it's actually a lot more difficult. It would take a lot more effort to be vegan. I'm not sure about the creative thing. I don't think that really comes into play. And the purpose is obviously to stop animal cruelty. I'm really behind on the chart. Hold on. I'm completely aware I've not done anything on the charts yet, so don't worry, that is coming. The S&P is an ATM forever. So my fingers when I can click buy and sell. Aussie yen. Let me just pull up the edge finder. Hold on. Because I'll be honest, I've been very lazy this week in keeping up with what's actually going on. I don't think there've really been any major developments. I would assume the Aussie is still weak. Yen is also not really in a position to buy. We've got a slight bullish reading here of 6. So we've got COT long, retail position short, seasonality is bullish, trend bullish, GDP. Okay. I'm not a fan of it. However, if the edge finder's bullish, I'm going to stick with the edge finder because, like I said, I've been a little bit lazy for the start of this week. So let's just be, draw our discretional trend lines. We'll just make it fit. And that's actually a good example of why trend lines are a bit useless in my view. They're so up to interpretation. But I think we actually spoke about this yesterday. I said that this entry doesn't look too bad if we can come down this trend line. We've got the oversold RSI. We've filled the gap. So actually makes sense if you are looking at the technicals and you are following the edge finder. I think that's a pretty solid potential buy. Not for me personally, but the options there.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.